Hey guys, welcome to another video brought to you by Total Control Traders. Now today's video, before we get into the market, we're going to start it off a little bit differently. I'm going to start off by something that I'm watching, top watch going forward for probably next 2-3 weeks. And as we are reaching very close to 200 subscribers, just wanted to take a moment to thank all of you for watching the videos as well as subscribing to the channel. Let me know what tickers you're watching. Leave a comment down below. Now let's get into the video. Oh, actually one more thing. Our chat room currently has a free 7-day trial, so make sure to check it out at totalcontroltraders.com. I will link I'll post a link down below. All right, let's get into it. First one. This is actually reverse. This is the one I'm looking at, Netflix right now. And for those of you that haven't seen the video from July 19th, make sure to check it out. Just 2 minutes of that video, July 19th, from 54 minutes to 56 minutes. 2 minutes, and there's this theory that I discussed in that video, and since then I've noticed a few more charts that have worked out. The play has worked out, that exact play, and a majority of them, I think all of them actually, are on big techs. So I can't remember which one the first one I noticed was. So far, just off the top of my head, what I remember was Nvidia, which is what I pulled up. There's Apple, there is AMD, there were 1 or 2 other ones, but I can't remember which ones now. I can go back to the video and you'll know which one I'm talking about. But anyways, let's compare this. So this same play is now coming into Netflix. Long-term sideways action, to be exact, on Netflix was about a year. Over a year now, actually. We're in September, so 14 months of sideways action ever since we reached this bottom here, June 29th, all the way till now. It's 14 months of sideways action. Nvidia specifically was, let's see, August till the breakout, the actual breakout, May. So what is that, 9 months? Nvidia was 9 months versus Netflix is 14 months. Time and half. 1.5 times longer than Nvidia. Meaning, upon a bull break on Netflix, this bull move should be either a lot more aggressive or will be a lot more longer term, a lot more dragged out. So keep your eyes on Nvidia, and the specific play that I was talking about, that the same pattern that's shown on all those big tech that's broken out, Nvidia, Apple, AMD, I think, no, probably not Microsoft. Anyways, whichever one. Again, July 19th video from 54 minutes to 56 minutes. The theory is, now, there is a breakdown fake out before the actual move begins. Okay, and this is the beginning of the pattern. Aside from the sideways action, this is the beginning of the pattern. First sign is a breakdown fake out, followed by a high, whether it's that, ideally you want to see new highs, new all-time highs, followed by the third is a pullback to GP. Okay, so here's the breakdown fake out on Nvidia, and on Netflix is a little bit different, but essentially the pattern is still there. It still works for the pattern wise. Now if you look at this, it's a trend line going upwards. Now both of these are weekly charts. It's higher low, higher, and then sort of just sideways, but it keeps making higher low, higher low, higher low before a breakdown fake out, no follow through. Okay, followed by, now this did not make a new all-time high, so it's not as ideal. It doesn't match the pattern exactly, but 2 out of 3 breakdown fake out, GP, and now we're coming up to new all-time high. So what could happen on new all-time high is we could pull back to a GP from this move. But based on the pattern, I think I think this could continue to run. Now let's take a look at what happened to Nvidia after this GP. It kept running all the way up till this week. From the GP, that's a 71.21% move over 16 weeks. 16 weeks. What is that? 4 months. Over 4 months is 71.21%. Okay. So keep that in mind. Netflix will be on top watch going forward for the next week or two, especially continue to be on top watch as we break over 600. Now on Netflix, because the market is potentially looking at a temporary top, looking for a daily higher low, so there could be opportunity for lower entries versus today's prices. If you look on the daily is already overbought, reaching that overbought. Where is that GP? Oh yeah, okay. So reaching that overbought territory, and we are seeing a big upper wick from this previous all-time high zone, and we are a little bit extended from the daily 8. So the previous scenario that I had discussed here on our last video, whenever we reviewed Netflix last, it is working out. We are coming up to this previous all-time high zone, and we could potentially see a pullback to revisit this top of the key zone. Let's see if that lines up with anything. So let's say it could be 0.28236. No. So ideally, maybe you want to see a pullback to like here before an actual run up. I would say this one might be bigger kind of thing, and retest previous high. So that would be the scenario that I'm looking at. Most ideal and possibly most likely scenario, depending on what tomorrow looks like. Tomorrow, if we start seeing a little bit pullback, this will be most likely scenario, and I will be looking for an entry on Netflix. Now we could also, as discussed just not too long ago, we could be looking at a pullback to GP. Even so, that would still mean a strong chart. Okay, so I might divide it up to 2 to 3 entries. First entry at the 0.382, and then second entry, the bigger entry at the GP. All right, now let's get into the market. SPX. As mentioned just now, that the market could be looking for a pullback. SPX looking like a potential top out with a spinning top candle, and then an almost shooting star candle today. Decreasing bear volume, so not too concerning yet, but there is a daily bear divergence as of right now. For now, we're gonna have to see whether this follow through today going into tomorrow, and then watch for what the reaction looks like at the daily 8. So last time we touched the daily 8, it was a straight bull movement over the next 2 days, but now there's some upper wicks forming, whereas last time there were no upper wicks. And reversal candle formations. All right, next is NAS, and this is another reason why I think that there could potentially be looking at a daily higher low coming up. NAS is at 1.1 to 1.272 extension target, and we are stalling with upper wicks with a spinning top candle yesterday as well, and an almost shooting star. Not really. Dragonfly, yeah, the reverse of dragonfly, gravestone candle. Anyways, double reversal candle, potential of reversal, extension target along with a short-term trend line. So everything's lining up for a rejection here. There is no bear divergence, however, on NAS, so that's a little bit less concerning. But with two indexes lining up for potential reversal, that gives a little bit of a red flag. Now on RUS, There's no significant bear sign yet. There's no bear divergence. There's no spinning, no reversal candles. It is a little bit of decreasing bull volume. So bears, once they start showing up, could very well push this down easily. And we will be looking for a daily higher low. Would you call this a daily higher low? No, I wouldn't really, because if you look at this, it's a straight move up. Okay, it's a slow. This is more so a 4-hour higher low. If we were to look at the 4-hour chart, this makes sense. 4-hour higher low right here. But there was no daily higher low set as of recent. You're going to need to see something more like this, whereas it gives a little bit more candles, set a clear higher low versus one single day. Okay, same with here kind of thing, clear, or to be specific, daily higher low wise, this one's very clear. You know, you need to see something like at least 2 days of reversal to set that higher low. This one still is not a higher low. This one you could call it, but is it clear? It's not very clear. All right. And as for Dow, also showing more bear price action. The volume is not exactly there. No bear divergence. So it could just be hovering around for a little while, potentially forming a wedge going sideways. Market is a little bit more choppy nowadays. So what I've been focusing on is taking profits on majority of the positions, because the majority are agreeing from before. And getting ready for that, whether it's daily higher low or weekly higher low. Let's see what the weekly looks like. Okay, so weekly is a little bit extended on the SPX, a little bit, but seems like we're just grinding up on the weekly. NAS is a little bit extended as well. Russ shouldn't be. No, Russ is not. And Dow's okay. All right, let's look at the let's look at the indicators. US dollar is okay, no significant bull volume. Bonds okay too. Gold is okay. We're potentially stalling at that GP zone again, but there's a chance that this is going to break bull. Notably lower bear volume versus the bull volume. So watch for gold. It could give us a sign for reversal on the market. A little bit concerning, but not a whole lot. All right, now let's get into the tickers. Actually, Bitcoin. Almost forgot about Bitcoin. Stalling around that GP area. Did break above slightly. Unable to break over this previous support. Resistance. Not a whole lot here. So we've been stalling for quite some time. It looks like a weekly bull flag. Weekly bull flag is forming. There's lower wicks on the weekly. So weekly is still looking strong and a little bit of a decreasing bull volume, but no major concerns. Use the weekly 8 as your guide. You know, if you are in the trade, doesn't matter where you really got in, aside from maybe last week or the week before. You know, on this whole move up, you should be a relatively green position, depending on how much room you want to give. You know, weekly 8 is what I would be using personally. Daily 8 is already broken bear. It's chopping around it. No significant red flags. It looks fairly bullish on Bitcoin. All right, next is HIVE. Okay, so the wedge might be a little bit higher. We're gonna have to see where the higher low comes in. It could be a rising wedge, but no significant bear volume. Big bull volume today was an upper wick, double top. A little bit concerning. 4.27, 4.28. This could be a double top, and big bull volume. You're gonna need to see continuation tomorrow, or this bear divergence might play out. Gonna need to see continuation for the next 2 days going into the close of the week in order to negate that. All right, next is Amazon. Okay, so we took profits on Amazon today. This was a longer than anticipated trade because we entered on the gap down somewhere around 33.50 kind of thing. It was a trade that we believed that it was going to gap fill regardless. So, or at least for me, I personally believe that this is it's not a stock that I worry about holding. So as this came down making new lows, it didn't even touch the daily 8. It lost the GP ever so slightly, and then immediately you started seeing reversal. There is a hammer right here at the bottom, immediate reversal over the daily 8, so that's a very bullish sign. A little bit decreasing of the bull volume, so a little bit concerning. The next day, bear volume very minimal, and then it started increasing bull volume. The reason why we sold today is when I was looking at this, we didn't get to the top of the key zone, we didn't get to the gap fill yet, but we are really extended, fairly extended from the daily 8. What do I call this, really? 4.1, yeah, we are pretty extended from the daily 8. And we were having a little bit of trouble. There is a resistance here. There is a gap left behind, or there was before the end of day. By the time we sold around 35.20, yeah, 35.20 or 35.21, just a couple dollars off the top. So as we're looking at this, it came back down. We didn't sell on this candle, didn't sell on this candle. It started going back up, and I noticed that there was a, as you can see here, depending on how you draw it, there should be, yeah, there was 30-minute bear divergence from here to here. There was an hourly bear divergence, okay, and there was a 4-hour bear divergence, wherever that went. Where'd it go? Okay, maybe not. Anyways, so almost nailed that top, and it was a very nice trade. Came back, by the end of the day, it came back, nearly filled the gap. Did it fill the gap? 34.75, 34.70, nearly filled the gap, and forming a shooting star candle. Would anticipate a higher low from here. Now, probably looking around 3,400 would be ideal for the bulls to hold. That is where the support resistances were. Let's take a look if it lines up with anything. Hey, look at that. Lines up perfectly with a 0.382, so we'll be looking at 3390, 3,400. 10 points difference, 3390, 3,400 would be the most ideal scenario for the bulls to hold. All right, next is Apple. Okay, oh yeah, so eventually I do believe there is going to be a gap fill, just depending on how far this daily higher low is going to be. The further it is, the longer it's going to take. Next is Apple. Apple made a new all-time high today. However, there is a slight dragonfly as well, shooting star almost. And if you look at this, decent bear volume. There's a little bit of a warning sign, a little bit of a red flag. We broke the channel. I was unable to see follow through. There was a gap down, selling off, and then today was a gap up, bought up, and then completely sold off. So this is a slight reversal candle. Did not make it to the extension target yet, but based on this, I would anticipate that we're going to stay in this channel for a little while longer at least. It is a slow grind up, so if we get to that lower channel, lower trend line of the channel, that would be an entry, and then you can sort of just write this channel up. Next is Netflix. We covered already. That should be the top watch. And next is Tesla. Tesla, a little bit of a stall as well. We did break to a new high, so higher low, higher high, higher low, higher high. Pattern stay intact. This channel on Tesla, it's basically a channel, yeah. Depending on how you draw this, you can easily find a channel in here. Lower low, lower high, higher low, higher high, higher low, higher high, higher low, higher high. So it is in a very easy pattern to play. I personally anticipated that we would see a 751 before pulling back, but based on these candles, there is a chance that we're going to start seeing pullback. There is a daily bear divergence as well on here. So careful if you're in position. We did take half profit already. Looking for that higher low if we were to come back down to this lower part of the zone, this channel lower zone. money line, short-term lower trend line, anywhere in between would be adding to the position. All right. Next is Zoom. Okay. So with Zoom, there's a couple, aside from the one that we talked about on Netflix, Nvidia, aside from that pattern that I've been noticing on big techs, there's also another pattern I've been noticing in the market. Quite a few tickers having this pattern. Gap down on earnings. A lot of people normally would expect an immediate gap fill or sort of gap down buying pressure, but seems like what's happening on a lot of these earnings gap downs are instead what we just looked at. Gap down earnings, a little bit of a buy up, next day still red, a little bit of a buy up, and then reject and continue selling off before going straight higher high. Lower high, lower low. Yeah, going straight higher high. So this is what I'm thinking for Zoom. Now, if we were, and as we can see, there is a support right above too. So tomorrow we could be seeing basically that exact pattern. Tomorrow, going to the end of the week, we could be looking at, buying up here before our next leg down. Yeah, I would say probably somewhere here before a straight almost gap fill. So somewhere right here. Probably longer. Yeah, this is what I'd be expecting on Zoom, depending on what the action looks like over the next couple of days going to the end of the week. If we were to see a rejection around that 302, would anticipate this pattern to work out. I think there was another one. Yeah, okay, this one. Now, even though this is not, in comparison, market cap wise is a lot smaller, this is similar pattern, gap down. On top of that, there is a weekly bull divergence right here that needs to confirm by seeing a little bit more follow through on the daily. You're gonna need to ideally break over this lower key zone that we rejected from today. Once we break over it, I would anticipate something like this. Gap down, reject from this previous support, slow bleed, and now we're potentially seeing a straight buy up into near that gap fill to about 881. So with that being said, this could be redrawn differently, a whole lot less aggressive. That would make a lot more sense to me. So similar patterns. And next is Roku. Now let's talk about the money line. The money line setups. There is a lot of similar setup for this particular pattern as well. Personally I noticed 3 as I was sifting through the charts today. So this is Roku. And hey, I am Tim. Anyways, so Roku, money line. We have seen multiple bounces from the money line, and I had to redraw this money line because we were waiting for that higher low to touch the money line, but it didn't come, and today we broke both to a higher high. So I had to revisit this money line to see if there's something that was off or something else that worked. So I redrew it, and then as you redraw things, you gotta make sure whether they still work. I'm looking at this, no close under, no close under, no close under. Again, maybe a very slight close under, but it's like right on it. And then no close under either. Actually, that's where I use my second point. Now with that being drawn, it shows we did touch the money line. Next day it was a straight bounce from money line, and from there we made a higher low into a daily trend change now today with decent bull volume going into higher high. Tomorrow we're gonna need to see some follow through. So we did pick up Roku today. Even with just a bounce to 0.382, we'd be looking at about 8% move. Now on this, I would anticipate at least the third touch eventually. Don't know how long it's gonna take. It might take 2 months, 3 months, 4 months kind of thing. But eventually we should be looking up at previous highs for that third touch. whether it's going to break through or whether it's going to reject. Gonna have to see what the chart looks like there, but that is looking at about 30% trade. So the risk to reward is still really worth it, with an easy stop at yesterday's low. Now it's about 4%, so call it 5%. You know, upward is 7. So even as short term wise to the 0.382, you're looking at about 2 to 1 risk to reward, 1 to 2 risk to reward. And to the GP, you'd be looking at about 1 to 4 risk to reward. Okay, next is Twitter, and similar money line play. Sorry, my dog's hair is on my glasses. All right, similar money line play. So looking at this, you know, support, very similar to Roku. It is a little bit leading on comparing to Roku, and the next one is going to be a little bit lagging comparing to Roku. So this one is made, it touched the money line, straight bounce from there, and made a higher low, and it's already made a higher high as of today before Roku did. A little bit of a bigger upwick, decent volume. But in comparison, looking at this to that previous all-time high is only looking at 11% away. So if we were to look at draw a fib from here, essentially we did hold that 0.32, didn't really touch it. So we are already rejecting from 0.382. The potential move on this one is a lot lower just because of where that previous high zone is. But regardless, it is a money line play as well, which should, even if you were to, you know, just buy and hold it a little bit, you should see a move towards that GP, towards that resistance. So, and that's what we call a money line, right? Next is BYND, Beyond, similar idea. The third of the bunch, the third of the 3 that I know, money line plays. So it's been a bounce from here, a second touch, decent bounce, but not a whole lot. 50-60%, and now another touch on money line. Now personally, I don't play Beyond as ever. Yeah, I don't think I ever play Beyond. So it's just something I'm bringing to your attention. You know, if we're looking at this, it's already lost a GP versus the Twitter is holding the 0.382, well no, 0.5, and Roku is holding the GP. And this one is lost the GP, so it's a little bit weaker, and it's not a ticker that you usually play, but essentially it is still at money line. Between the 3, this one is probably the least that I would be playing, least likely to be playing, even though there is still opportunity there. And I think there was another one. Ah, there we go. Okay, Piton. So Piton's the weakest of the 4 when I look at money line plays, because essentially this was the money line. Okay, this was the previous money line, and we're way below it. We are way below it. It's lost momentum, like easily seeing that it's lost momentum. Okay, this was the actual money line 1, we'll call it. You know, this one maybe I should make it different. Anyways, so if we're looking at this is the new money line. Essentially right now is a third touch, but we're gonna need to see follow through tomorrow, just as any other money line plays. On the touch, you know, that can be a very low risk entry, especially on this kind of setup where it's a money line, previous, you know, 2 touches, as well as GP, easy low risk entry. You know, you can say tomorrow, let's say if it's a flat open, okay, or a lower open, you could buy it with a stop under today's low. Looking at it, I really like today's low. You know how people get faked out if they use purely support and resistance. So support would have shown 98.62 and psychological support at 100, but this one broke down just under to fish everyone, 98.29. This is a very nice setup. When I look at this, you know, it fishes everyone out. It fish all the stops, and now is likely ready for a reversal, but we're going to need that confirmation tomorrow. Anyways, the Piton is another money line play. Ah, there is another one. I was thinking I had 5. 1, 2, 3, 4, 5. Yeah, okay, this is the 5th one. Workhorse. Now this one is an example of when possibly not to play money line. On workhorse, we're seeing this previous money line, 1, 2, almost touch, and then a third touch here with a very decent bounce, very nice bounce, 163% on this last money line touch. Okay, but the reason why I say potentially not play this workhorse, this fifth touch, is because the fourth touch was unable to see a decent bull action. Okay, the third touch was already a little bit meh because it touched, it came back to touch again before a slight move up, and then probably a 0.5. Let's take a look. So 9.2, 9.23. No, it actually lost a 0.5. No, it didn't actually. So it held the 0.5 strong, and that's when the bull started coming in. But this one is a little bit different on this touch. We lost the money line already. Slight bounce over that 88, held it a little bit, and a huge upper wicks forming. I don't care. And I think there is news. I'm pretty sure there's news or something that caused this rejection, but I don't really care what the news is. I just look at the chart. You know, the chart is showing me that there is very minimal bounce. Tomorrow is gonna need to hold this money line. If it loses it, no, don't play it. So this is one of the examples, a good example of when potentially not to play money line, or potentially not to play a pattern that's worked out for you. When it's negating, you know, you gotta discover what points make the pattern, but this one is obviously not meeting the points that make the pattern. Okay, next is another top watch going into end of the week. We'll be looking for an entry would be China names. Haven't really decided which one. BIDU, Baba, KWeb, Ying. Yeah, anyways. Alright, BIDU, as mentioned on the last time we reviewed this last week, between BIDU and Baba, I like BIDU setup a lot more. Now, if we were to look at this, when we reviewed it, it was, I think, 24th? That sounds about right. From the 24th close is 7.36%. Now, if we were to compare it to Baba, from the 24th close, it's 1.8%. So right now, Baba finally got over that 88. BIDU was already over the 88 with the daily bull flag holding that 88, and now we're seeing increasing bull volume going into that next resistance. BIDU looks a whole lot better in the sense that, you know, if we were to look at, there's a whole lot more upside. Not only that, you know, it did drop more. So leave it here. 0.786. It dropped to more than 50%. Oh, what is this? 60%? 70? 61.70. Jesus. Whereas Baba, it dropped nearly just over 50% as well. 51.30. So Baba is a bigger market cap. It has dropped less already. Now, regardless of what the situation is, if you got cash sitting around, you're not sure what to buy in, but not sure what to invest in, either one of these names should be okay. You know, you are buying from basically half price from the new all-time high. But yeah, BIDU looks a whole lot better. I will be looking at least the 0.5, which is coming up right under that key zone, but there is a resistance right before, right about 168.62. Volume looks amazing for continuation. Baba, gonna need to see continuation tomorrow, breaking into a new higher high, but the chart looks a little bit weaker. And as for GP wise, we finally made over the 0.382. The shorter term GP is coming, not really coming up yet. But the bigger picture GP is quite a bit above. Quite a bit of a way above. Anyways, between the two, still liking BIDU more. What was that one ticker that I wanted to review? I just thought of. Oh, MJ sector. Talk about money line. Piton. TLRY, Cron. I think there was a couple other ones. Money line touch on TLRY, slightly lost it and made a higher low into higher high, but this is a little bit of a red flag today. Chopstick tops, bear volume still okay. We're gonna want to see a hold of the daily 8 going forward because we already made this higher low. We're gonna need to hold the daily 8 instead of coming back down, straight down to that money line again. Easy stop right now, just under 12.90. But marijuana sector, once we break and close over this $14, I would anticipate much further upside to come. So similar idea, you know, if you're looking at high wise, we won't even look at new all-time high on TLRY. It's just ridiculous, $300. I was playing marijuana those days. It was an amazing run. I think I only caught like, you know, a small chunk of it. Anyway, so if we're looking at talk about firm all-time highs, now this is something that you shouldn't do if you shouldn't use to base off of whether if you should invest in this stock or not. You should never think that a stock will go back to its former glories. Okay, it will not. It's never guaranteed that it's going to go back to its previous high. Because if you're investing on that, there's probably more than 50% of the time they're going to be losing money instead of making money. Because all your cash is going to be tied up, going in the downtrend, playing downtrend stocks, looking at potential move back up to that new all-time high. Or the previous high at least. So never do this, but in a sense, if you're looking at BIDU, you know, 50%, they are a lot larger market cap. So for them to get back to the previous highs, the chances are a lot more likely. Whereas marijuana sector, it is still a newer, relatively newer sector. Chances are a lot slimmer in comparison. So if you're looking at, you know, BIDU 50% discount price kind of thing, you could argue, okay, TLRY is going to be a better buy. But I would say go with investing standpoint, go with BIDU. TLRY, even at the most recent high, you're looking at 80% off. So very comfortable going a longer term position here. Initial entry, first entry. We are in that key zone. We are at that money line. We did make a higher low. We're looking at making a daily higher high. And gonna need to see a hold of 12.90. All right, so similar to Cron, we're not gonna cover it. You get the idea. BIDU, Baba, we covered. Next is skills. So a little bit scary on skills. The money line was already lost. You know, we saw multiple bounces, 1, 2, 3, 4, 5 bounces from this money line already, and every single bounce has been amazing. This one is 40-some%. This one is 40-some%. The third one is almost 100%. The fourth one is just under 100%. The bounces on skills money line has been amazing, but now that has been lost, and we came back down to that all-time low. I think it was 1 cent off. 10.05 was the all-time low. Yeah, 1 cent off. 10.06. That would have been an amazing entry. And now what happened was the next day, we got a little bit of a sideways action. Yesterday was a very nice bull price action with a 14.56% move from low to high, a close of about 10% move, showing that there's potential for gap up. And today we did see a huge gap up. So congrats for those that swung skills. It was a 15-16% gap up. But from there, how would you know that you should be selling a gap up? Well, 90% of the time you should be selling a gap up regardless. But 100% of the time, if you're gapping up into resistance, into trend lines, previous support trend lines, whatever it is, any sort of resistance, you should sell off 100%. Okay, at least sell half, at least sell 60%, 70% kind of thing. So today was a classic example, 16% gap up after a 10% run, straight into that previous money line where we have seen 5 bounces from, and huge bear volume came straight in. We had a little bit of wick. You know, this is giving people hope, getting more people to buy in. So in order for the sellers to sell their shares, potentially, hopefully, without dropping the prices too much, but there is a whole ton of sellers, and we saw an immediate gap fill with a 10% drop. So skills, where is it going to go from here? I can't see this making a higher low before making a higher high. Essentially, this is a daily trend reversal, even with the 10% drop and big bear volume. So what I can see from here is we made lower low, double top. Didn't know what to call this. It's not a higher high, it's not a higher low. It's double top, lower low, double top, higher low, higher high. So daily trend has now changed, and from here we will be looking at, so we are on the 0.5 already. If we're to see a straight reversal tomorrow, this chart is gonna be strong, but we are still a little bit extended from the daily 8, so likely a little bit more pulling back needed. I would anticipate at least the GP, which would make sense on the close of yesterday's price with these supports. Let's just draw here, right around there, 1168 to 1187. That could be an ideal initial entry, but I want to give, if I were to play this, if I were looking to play this, I'd be looking at giving it another couple more days, at least into the end of the week, see what next week opens at, because essentially it has already ran 30-some%, yeah, almost 40% from the bottom. Skills should be on top watch. Just gonna make a note for myself for next week at least. Just gonna quickly take a look at, I think we're running overtime here. Yeah, so we're running overtime here. Gonna quickly take a look at Moderna, Pfizer, PLTR, TKNG, FSR, AFRM, break. All right, Moderna still in that pattern we thought about, so most ideal entry around that GP and the trend line. Nothing has changed yet. Pfizer. Okay, so it's a straight sell-off, and the bounce is coming. Now this scenario is unlikely to work out now. GP probably more so around somewhere here, but previous resistance, support, so I would anticipate a rejection from around here. Most ideal entry would be around that GP. Depending on how long it takes, we could be looking at 0.786. This would be the scenario that I would anticipate on Pfizer, especially seeing the weakness here. Hammer forming, potential reversal. Next is PLTR. Slow grind up. There is no reason for sell yet. There is 88, we are a little bit extended from it. There's very minimal bear volume. Still just grinding up. 88 would be the guide. Remember how remember what we discussed, you know, put it, what was it here? Let's see. Put it about 2% below the 88. Yeah, that would make sense. All right. So if you were in from here, think about that. You know, if you were in from, let's say the next day, 2% from the daily 8, you would still be up about 3%. So just depending on how much you're willing to give back. But with PLTR specifically, more than comfortable holding it personally. Once we get to that 2750, then you'll be looking for a potential reversal. There's multiple rejections here. 1, 2, 3, 4. Sorry, this is 2, 3, 4, 5, 6. 6 rejections on 2750 mark, 2745. Watch for that zone. Very key resistance. Next is DKNG. So daily bull flag formation. This case did not work out. We are not looking at a bearish case yet. There is upper wicks forming right on that GP. Gonna need to see. We are still in that. No, RSI is still relatively high. It is not overbought. 4 hours is okay, it's cooling down. RD is already cooled off. Bearish divergence, lack of follow through so far. I like the chart. We can see further upside. Now on the further upside, yeah, actually we can see further upside. So DKNG, now we remember how we discussed the Gartley pattern. Amazing follow through already. We broke straight through this key zone like it's nothing, and knife through butter, and straight through the 12272 resistance or extension, 1 to 1.272 extension target. Now we could be looking at a rejection if we do make it to 62.39ish. That is the 1 to 1.618 extension target, which is right around the top of a top of a GP golden pocket. Now if we do see a rejection, we'll be looking at a daily higher low. Right now the chart looks amazing. Daily bull flag, should see continuation. Volume is nothing significant. Next is FSR. Middle of the range, lost the key zone already. Seems like it looks like it might be rejecting from the key zone, closing right on it, right under it. If bear volume, okay, so it's increasing bull volume. Gonna need to see follow through tomorrow break. Ideally, at least make it to the upper part of the key zone. But regardless, even if we were to reject from there, we could be looking at lower prices to come. Essentially right now is a daily trend reversal. Lower low, lower high, higher low, higher high needs to come tomorrow. Next is, what is this? Okay, AFRM. Huge gap up on the news of Apple partnership, and is holding up really well. But essentially, I would think that there would be some sort of pullback, maybe not gap fill, but maybe close to it kind of thing. So this whole run wise, I would draw it from there. We could be just looking at the 0.5, which, does it line up with anything? Somewhat. So it lines up with the rejections here, resistances. But AFRM, you know, very nice move. Congrats to those that swung on this gap up. Huge gap up, 41%. Right, next and last is we're looking at Bragg. Now we're going to start charting on the US side, at least for the daily chart, because the daily is already imported from the TSX. We took profit near the end of the day yesterday, and it was a very good decision. You know, there's no reason to take profit, to be honest. If you look at this, there's an increasing bull volume, very nice bull volume, closing near the high of day, and it did close at the high of day. But when we took profit, it wasn't. It was like just under the high of day. So you would think that it's going to be a gap up. So we did get a gap up, but it was selling off pressure today. The reason why we took profit yesterday was, if you look at this, you know, it's a 18. Whew, actually, I didn't even look at it that closely. 19% extension from the daily 8. Jesus, 19%. Okay, back here was 26%, so it can get even more extended. Let's see this one. 30%. It can get as far extended as 30% from the daily 8. But I didn't even notice that. This last one, I was just looking at this last one. It's about 19% extended, and when I was looking at it yesterday, it was about 19% extended. Big bull volume. You know, we're not overbought on the daily yet, and we were already up something like 20-some% on a 4-day trade. So I'm more than happy. You know, I took half profit at least just to ensure profitability. And even though this was an immediate back test, on this move up, I would anticipate there is going to be another back test. So I set an alert right about here at about 10:58. The support that I'm looking at, the previous resistance here, about 10:47, with the 0.382 just under at 10:37. So that would be probably where I would add back that half position. But because originally I was already splitting this into a 3 entry, that's essentially about very minimal sizing. There's going to be a much larger sizing if we do start seeing, you know, lower prices to this. I might actually increase the price, the entry, the add on 10.37. Anyways, so that's it for today's video. Discussed a whole lot of game plan with you guys. The top watches are, you know, Netflix, Bragg, what's the other, Roku, and China. 1, 2, 3, 4. Yeah. So keep your eyes on those tickers. Hope you guys enjoy the content. Again, thank you for all your support. Thank you for watching the video. Thank you for subscribing to the channel. I will see you guys in the next video.